Anil, how can we help you?
Well, there are two questions. One is I would like to go for top-up loan. And question is we have booked one flat at Andheri West, which is a Mala redevelopment building. So it is, stuck due to non-CC, for non-further CC. So it is the construction is stopped from last 2 years. So what can we do? Means when we can get the CC from through MADA or BMC? Can you help me out, or can you just throw some light?
Okay, about getting the CC from MADA and BMC is another question that we will have to answer another day on this particular show. Today, Anil, we are answering home loan questions, and that's what Karthik is an expert in. So,
Right.
Karthik, he wanted to know about top-up loan. Is he eligible for the top-up loan? How can he apply for it?
See, top-up loan is a great facility which a lot of lenders have. They give you the top-up loan because obviously they earn a little bit more interest on that, and it's a great facility for us because we can use that loan for a variety of purposes. Understand that this top-up loan is paid to us directly and not to any builder or developer or any third party, you see. Now, the top-up loan depends on about 4 important factors: the value of the property, the outstanding loan that you have, your income, and obviously your repayment capability, because all these 4 things will have to play together. Because when you're taking additional loan, automatically your EMI is going to rise a little bit, because you'll have to pay a little extra EMI to sort of compensate for that loan that you've got to repay the bank. So therefore these factors become important. Also, the fact that if the property has gone up in value, then your 80% component also automatically rises. To give you an example, if it is a 1 crore property and you've already taken 80 lakhs of loan, then you want a top-up loan, not possible. But if the property itself moves up to 1.5 crores after 5 years of valuation, by the time your loan is, say, about 70 lakhs, then if you want a 10-15 lakh top-up, it's possible, because you'll still be within the 80% kind of a framework that the banks would like to operate in. So in that sense, your top-up loan would be a workable idea. And what's the procedure for this? Now, the best thing to do is to go to the same person who has given you that original home loan. The reason for that is because your original documents are sitting with that bank or that non-banking company, and therefore that is the most obvious lender or the obvious choice of lender for you. Go to them, apply it. There's obviously a formal procedure. They will do a due diligence again based on your repayment capability, on your income criteria and all of that. But having said that, it's a very easy loan to get, and they'll be most happy to lend it to you. If they've already lent you a larger component, a top-up loan is something that they would be happy to lend.
Kumar, go on, tell us what's your question.
Good evening. This is Krishna Kumar from calling from Bangalore. A 43-year-old Air Force officer. I am buying a 3 BHK apartment for end use, and I'm availing a loan of 45 lakhs. The bank is insisting on taking a home loan linked to life insurance policy. However, I am adequately insured and do not find any need for further insurance or as a end use. My question is in 2 parts. Now, considering that I am adequately insured, along with a lifelong pension available to me and thereafter to my wife in case something happens to me, should I take an additional life insurance linked policy to my home loan? Or secondly, in case if I had to take a home insurance policy, what kind of policy should I go in, whether term insurance or a term insurance linked with a maturity benefit?
First, let me eliminate the option that must definitely not be considered, which is the last thing you said, Krishna Kumar. The last option that you mentioned is, should I take a policy which has got added benefits? Now, let's understand one thing, that whenever you're buying an insurance contract or an insurance policy, so to say, any additional benefit that's going to be attached with it, it's going to come at a very steep cost as well. So that's obviously not in your interest. Now, coming to your specific situation, you're already saying that you're absolutely adequately covered, and which is why you don't see a need to cover. But you see, a lot of times, a lot of banks would just not give it to you till the time you don't do that. So then in that case, what's the best bet for you is you still have an insurance cover, and maybe you have a standalone term life insurance cover. And then you could also probably, break it into smaller parts, and based on the requirement or based on the outstanding loan that you have, say maybe 5 years down the line or 8 years down the line, you could maybe decide to discontinue some of those policies also. Because the way these policies work is, if you don't pay the premium, then the policy lapses, but you are here deliberately lapsing. So because your need for life insurance has got over at that point of time. So you may want to consider doing something like that. But having said that, sometimes these options are something that you might want to do. But sometimes buying a single premium to do the whole loan, or buying that life insurance which is linked to the home loan and things like that, again would depend on the contract of that bank in concern, that whether they are happy to let you buy your own plan, and then whether they'll be happy to entertain you based on the fact that you have your own plan. And if something happens, can they have an assignment of the same plan in favor of that particular institution, so that from a security point of view they are secured, and from a mis-selling point of view we are secured that we have got the product of our choice.